So without further ado, we are going to introduce the man, the myth, the legend. And a lot of you are wondering, okay, I want to do more with my real estate investing, but I just don't have the money. So how do you get enough money to invest in larger deals? So I'm going to introduce here Todd Dexheimer, whom you all should know by now. And Todd's going to tell us how to raise $5 million in a day.
All right. Who wants to know how to raise $5 million?
Yes, please.
Right? So I want you to be able to raise millions of dollars in a day, because I think you could probably do some good things with that millions of dollars. Think about your goals and what you would do. What would you do if you had $1 million and could raise $5 million, maybe even $10 million? What would you be able to do in your real estate business? It'd be pretty powerful. You grow it the way you want to grow it. The business could expand. Now, if you're sitting there going, I'd go to Vegas and I'd double that money, probably leave the room right now because I don't want to teach you anymore, okay? But what I want to teach you is how to raise that money, because here's the last thing I want to do. I don't want to find that deal. I don't want to find that amazing deal and just assume the money's going to come to me. Amazing deals, you might get a couple bucks from, but look, people invest in you because they know you, they like you, they trust you. I don't know how to use this thing. There's a danger button on it. Who has a danger button on a clicker? All right, so if you want to buy apartment buildings, you want to buy industrial warehouse buildings, office buildings, whatever. If you want to build a big rental portfolio of any kind, knowing how to get the money is going to be a key factor. Being able to bring that money in. So there's two ways you can do it. One is you can do it. The other is you can have other people do it. But either way, you've got to know how to do it. You've got to know how to find the money. You've got to know how to find the people. There's three things to a successful real estate investor. Many more. But three big things. One, the deal. We've got to find deals. I'm not going to talk about that today. There's other people that are talking about that. Two is you got to have the money. That's what I'm going to cover. And number three, you actually have to take some action and do the deals. All right. So this I actually kind of just wanted to go through because my friend and business partner, Drew Whitson, couldn't make it here, and we were sitting in a boardroom, and he wrote down this wheel, and I've expanded a little bit, but I thought, as a syndicator, as the general partner, this is the wheel. This is all the things that you do, all the people that you need. So property management, execution, legal, the debt, the investor relationship, the asset management, finding the deal, underwriting, and so on. Okay, today we're going to talk about getting that equity. So when I put a deal together, and I got to come up with this money, I have to come up with enough for the down payment. We have to come up with the reserves. We have to come up with all the closing costs. We have to come up with the acquisition fee. We have to come up with the construction money. So even though I'm buying a $10 million deal, it doesn't mean if I got a 25% down payment that I only need to come up with $2.5 million. I probably need to come up with $4 million. Maybe more, maybe a little bit less, but maybe $3 to $5 million probably for that deal. All right. So why private money? Why should I bring in private money? Because quite frankly, it's easier, right, if you just do it yourself. And I don't even know if that's true, but you don't have to deal with other investors, right? You don't have to share any of the pie. I can have my own properties. I don't have to deal with other people, build my portfolio the way I want. Well, I can do a couple deals. I can do a bunch of single families. Maybe I can even buy a 10-unit building on my own. Maybe I partner with a couple people and we buy a 20-unit building, 30-unit building, but we run out of money. So look at where do you want your business to go. If you want your business to grow and accelerate, you're going to have to bring in other people's money. The other thing I really love about it is I get to provide people with really great returns. And for me, that's really cool. So when I was in my flipping days, I would get done with the flip, and we'd figure out how much money we made on the thing, and then I'd go meet with the investor for lunch, and I'd have a big fat check for them. There was nothing better than meeting with that investor and talking about the profits we made and seeing the smile on their face and them saying, when's the next deal? That's really cool. So I actually love being able to provide people excellent returns on their money. Last thing is, look, I'm buying these apartment buildings now. We got a 450-unit apartment building we're buying. I'm not going to own 100% of that 450-unit apartment building. It's just not going to happen. I don't have $11 million sitting down in my piggy bank. I wish I did, but I don't. So I'm going to raise that money, but that means I'm giving away some of the property. To me, it's worth it to have now that ownership of that 450-unit apartment complex and to be able to expand and grow my business, scale my business, versus having 100% of, well, either nothing or maybe a single-family house or a duplex. All right, so real quick, these are some disclosure. I don't know if I'll read through them all, but you have to make sure if you're going to raise money that you can do it with honesty. I think that's the most important part, right? You got to be able to do it with honesty. It's got to be taken seriously. You got to be diligent. You're a money raiser. You're a money raiser. That's what you do. It's a business. It's its own business. And you have to make sure you're focusing on that. You have investors. They expect you to communicate with them. They expect that you send them monthly reports. They expect that you're doing your job. So it's not for everyone, certainly. You have to make sure that you are willing to set up a business to make it happen. Don't take anybody's money to put into your own company if you don't have a company. If you're just a buyer, if you're a dabbler, it doesn't make sense. On the multifamily panel, there was a question asked, do you have the experience? Do you have that team built? Does your team have experience? Right? Are you able to treat other people's money as good or better than your own money? Look, this pandemic hit, and like I said, I had 25% vacancy. I had a bunch of vacant units because we just got done remodeling, and I was pretty nervous. And I said to my wife, I'm like, things could get pretty rocky because I don't know what's going to happen, but we are paying these investors their money. And I knew I had my rental properties and I could sell them to pay my investors back. But you have to be prepared are you prepared to do that? Are you prepared to take care of the investors when things take a bad turn? Now, happily, the story ended a lot better than that. All right, so I want to go through 7 steps to raising millions of dollars in a day. And we've been raising millions of dollars in a day on our last several deals. It's so nice, and you can get there too, by the way. I don't do anything amazing. I don't do anything that you can't repeat, so you can get there as well. It's so nice. When we put a deal out there, and it's full in 3 days or 2 days. We just did what was it, a $5.5 million deal, and it was full in 3 days. It's so nice when you have that availability. All right, so first and foremost, you have to have a strong business plan. You have to know what you're going to do to that property. If you don't know what you're going to do, you can't explain to people what is going to happen, you don't really have a business, right? So we have to actually know what we're going to do. We have to have strong objectives. Not only what makes your company special, so what makes your company special, why is the team really good, but what also makes the property and the plan that you're going to implement into that property special? What kind of value are you going to add? What kind of things are you going to do that's going to serve the community? What kind of things are you going to do that's going to serve your residents? I'm a firm believer in we have investors and we're trying to make them money, but first and foremost, we're serving the people that are our residents and that are community. First and foremost, we are taking care of them. And my firm belief is that if we take care of the people that are living in our properties, we're going to make the money we set out to make. We're going to provide investors good returns. But my investors, they expect that I'm treating people with the respect they deserve. And so if they make a bunch of money because we screwed over all of our tenants, I don't think they're going to be very happy with me, and I don't think they're going to continue to invest with me. I would rather tell them, look, this is what we did, and we didn't make quite as much money on this deal, but we made sure that our residents in this building were being well served. That's going to look a lot better than when they hear the horrible conditions and all that kind of stuff that we had our residents go through. What's your is this investment long-term? Is it short-term? No. Again, know your business plan. Is it a cash flow play? Is it appreciation? Is it a little bit of both? You have to understand that and be able to explain it. You also have to be able to explain that to your team, too. That's really important, having a strong business plan. If you don't have a strong business plan, how do you actually take that action? Right? How do you get your team to follow through with that business plan? All right, so number 2, credibility. You have to build credibility. So how do you go? And the question is, you know, these guys kept on saying credibility. That was really important. Stephen, Matt, Sterling, you have to have experience. What do you mean I have to have experience? How do I have experience? Stephen, you went from flipping houses to buying a flipping 200-unit apartment building. What kind of experience did you have? Nothing, right? But what Stephen did, and he didn't have time to tell you, and he probably will, but he partnered with the right people. And you can do the same thing. You can start partnering with people that can fill your weaknesses in. And he mentioned that, right? He mentioned that you got to figure out what you're good at. You got to figure out where your strengths are. Are you raising capital? Are you implementing the business plan? Are you the asset management? Are you construction management? What's your strengths? So partner with other people that have experience. Whatever you're good at, that's your credibility, and then fill in the gaps, right? I really like doing this, making a sample deal with a full business plan. My booth back there, okay, Venture D booth, has several business plans or several slide decks that you can actually look through. Please don't take them, but you can look through and see what a sample deal looks like. So create something like that for yourself. You can just go onto like LoopNet, find an apartment building that you're not going to buy, but that looks like something you would buy, and underwrite the thing and make the numbers work for you, for your investors, and put together this business plan on it. That way you have something to show your investors when they go, what are you even doing? What do you do? And you say, here, I got this. Or I'll email you something so you can kind of see where our business goes. Credibility, know your market, and also understand the business, right? Be able to talk the talk. If you're not educated, you can't have, you're not credible, right? You have to be able to answer the questions. Find a coach or mentor. You can either pay a coach, or you can find other people that are in the business, serve them, give them value, and learn from them. I have people that I coach. I have people that invest in my deals to learn, and there's just a lot of information out there that you can get. There's no excuse not to be able to learn. The next thing too, this is really valuable. Partner with your property management company, or maybe even the contractor, or you could partner with the broker, so you can find other people around that you can partner with to make them part of the deal. They're tied in. Property management company, really successful in the town. They know it inside and out. Maybe you can give them a percentage of the profits And that instantly gives you more credibility. All right, so let's talk about where do we find the money. Where we find the money is our friends and family first. They're going to be the ones that are going to invest with you quickest, trust you the fastest. But we can't just assume that they're going to invest with us. We have to somehow make them understand what we're doing. If they don't understand what we're doing, right, they're not going to invest with us. If they think we're an engineer, because that's what we really are, and you go, hey, I got this sweet real estate deal, they think, what's this guy selling me? I've never heard of this. I've never heard of Todd doing real estate. Like, I don't know him. No, you've got to they have to get to know that you're in the real estate business. So I tell people, get your whole list together, get your friends and family list together, start talking about it. Start sending them a newsletter. Make sure they know that this is the journey. This is what you're doing. And instead of surprise, I've got this great deal. Hey, you should put 50 grand in this deal. It's a great deal. What are you talking about? Yeah, this apartment building. Whose apartment building? Oh, it's mine. What? So you confuse them otherwise. Here's what I'll tell you to do. Take your friends and family. Write them down. Coworkers, friends, family, acquaintances, anybody who you think you know a little bit at least. Make that list. Only put down the people you think have a possibility to invest, right? I don't want you to put Aunt Jean, who digs in her couch cushions for 25 cents just to pay her rent. Probably not going to invest with you. But at the same time, don't forget about your friend that drives the rusty minivan, that lives in the 2,000 square foot house, has a good job, and seems like they got it together. They might be your investor. I've got a few of those investors, and they invest consistently in my deals every single time. And one of them drives a rusty minivan and lives in a small house. And he's just an older gentleman that's done really well. He's the millionaire next door. You just never know it, right? So take that list, multiply that list by about 40%. 40% of them will invest in your deal. Figure out what your minimum is. You have to have a minimum. My minimum is $50,000. You don't want to go too small in your minimum, because guess what? They'll invest the minimum. So if somebody has $50,000, they'll invest $50,000. But if you tell them they can invest 25, they'll invest 25. It takes you a lot longer to raise $1 million with only $25,000 checks, right? If you've got 10 people that can give you a check for $25,000, you'll have 9 that can give you a check for $50,000. I promise you that. Maybe it's 8, so maybe I lied. But do the math, you can see how you can raise more money. Now you also have to be common sense, right? We can't go to 200,000 or $1 million. I might lose everybody then, right? But we have to have common sense. Where should my minimum be? I would suggest everybody out there, your minimum, make sure, I would say it's got to be at least $25,000, probably no more than $100,000, okay? At least starting out. The next thing is events just like this. This is one of the reasons I bring everybody here, is so we can network and meet each other. Quite frankly, the people on stage, they're amazing people, but the networking is where the real value is. That's where the deals are made. That's where you're going to make the most amount of money. That's where you're going to make the real connections, real friendships, is in the networking. So going to your local meetup events, meeting with high-profile real estate investors, just really meeting with people that have things going on, okay? Become involved in your church. Become involved in the Lions Club, in the Chamber of Commerce, whatever it might be. Whatever gets you going, become involved. Now, don't go there if you're going there just to raise money, and that's your only objective. Well, then you're not going to get anything out of it. But if you're going there because you have a passion or you really want to help serve, you're going to meet people that are your potential investors. That can't be your goal, but you're going to meet people. Talk to other people about what you do. I said it earlier. People used to ask me what I do. Oh, I'm in real estate. Oh, you're a real estate agent. Sure. People had no clue what I did. I didn't want to tell them because I felt like it would be arrogant on my part. I don't want to talk just about who I am. And I'm not telling you to sit there and talk to them for 20 minutes about what you do, but you got to tell them what you do. You have to have at least a one-liner that you can tell them, this is what I do. Thought leadership. Again, a conference like this, thought leadership. My podcast, I've got a podcast. If you don't listen to it, listen to it. It's called Pillars of Wealth Creation. That gets me investors. I asked a friend that was doing real estate syndication and doing really well. I said, how are you raising so much money? He said, well, you know I have a podcast. I said, yeah, I know you have a podcast. He said, yeah, I've got a podcast. I said, really? You raise all that money through your podcast? He says, absolutely. I raise all that money through my podcast. Now, I'm not telling you have to be a podcaster. There's many other opportunities. I've got a good friend that has a YouTube channel, raises a ton of money because of a YouTube channel. I've got friends that have blogs. They raise a ton of money because of their blogs. I've got friends that have meetup groups. Jason's coming. I don't think he's here today, but he's got a meetup group. He gets a ton of investors. Jason Urus gets a ton of investors through his meetup group. So you don't have to do this, but this is a great opportunity to get your name out there, to get people to know, like, and trust you. I have people that'll call me after listening to my podcast for 3-4 years, and I'll say, what kind of questions do you have for me? And they'll say, well, I don't really have any questions. I listen to your podcast all the time, and I guess I really know everything I need to know. They trust me because they've heard me so often that they know exactly what my brain thinks. Well, maybe not exactly. It thinks a lot of weird things. Be involved in social media. Pick one or two things, Facebook or LinkedIn. I love LinkedIn as far as getting investors. It's a way better medium, in my opinion, than Facebook. I think BiggerPockets is an excellent source. Those, if I were to pick two, those would be the two I would pick. But you can do Insta and all the other stuff too. What's that one that? No. It's like a conference, a running conference all the time. Clubhouse. I'm not on it ever really, but that's another one that I've heard a lot of people raising a good amount of money off the connections they make in Clubhouse. Get on other people's podcasts as soon as you can, right? I don't want you to go before you're prepared. I don't want you to don't go on there unless you have a website, unless you have something to market to them, right? I've got a website. Go onto my website, VentureDproperties.com. You can go on there and you'll get a free ebook. Right when you go on, it'll pop up, I want to get you a free ebook. I'm serious. Go on there after I'm done and get that free ebook. It's going to be educational. But guess what? I'm also going to get your email. Okay? And you're going to be on my investor list. Now, whether you invest or not, or whether you just click unsubscribe, that's fine. But you have to have a lead capture. So get onto other people's podcasts when you have that availability to have a lead capture and when you've got some credibility. Number 6, you have to continue to cultivate the relationships. This is one big thing. A lot of people go, how do I ask for money? How do you approach investors and ask for the money? And I said, do not ask for money. Don't be desperate. Don't ask for money. What are you doing? They've got a problem. They've got money. They want to find a good place to put their money. That's not going to lose them. They're probably tired of the stock market yo-yo effect, right? They want a good, solid place to put their money. You've got an opportunity for them. You've got a great, solid place to put money. Real estate is the second least risky investment behind bonds and yet has the highest returns out of all the investments, all major investments. What better product than real estate to give one of the lowest risk, highest return investments? You've got a great opportunity for them to invest in a cash flowing product that's safe and secure. You're providing them an opportunity. You've got to switch your mindset from I'm asking for money, I don't want to ask for money. No, you're providing them an opportunity. If they don't want to take that opportunity, that's fine. They made a big mistake, but that's fine. Okay. So cultivate the relationship. How do we do that? We want to build an email list. We want to continue to stay in contact with them. I like the idea of sending out a monthly email, a quarterly email, just consistently being in front of them. I don't love blasting people with like a weekly email, but I like that monthly to quarterly type email. One-on-one conversations are so important, especially if you can meet people face-to-face. I get a lot of people I meet from my podcast, and I don't have a chance to meet them face-to-face, but any chance I can to meet somebody in person, face-to-face, sit across the table with them, those are my investors. When I look at the people that invest in my company, the large majority of them are people I've actually sat down with. I've shaken their hands. We've talked face to face. Now, do I get other people that have never met me? I do. But the biggest percentage are the people I have one-on-one met in person. And then always continue to find ways to add value to them. How are you going to bring them good information? How are you going to always give them what they want, find opportunities for them, right? You've got to continue to cultivate that. One of the things is when you have an opportunity for them, they maybe don't invest in it, but they're watching you. They're watching to see the success that you're having or the failures that you're having. And so then the next deal or the next deal, they're going to invest. You've got to talk about the deals, by the way, that you're investing in or that you're purchasing. Close on the deal, you celebrate it. You put it on LinkedIn, Facebook, you send them a newsletter. We closed on this building. Otherwise, they don't know. Otherwise, they're not excited for you, and they're not wondering, what did I miss out on? All right, so last one is we have to execute. And this one's important because you might be able to raise $1 million on your first deal, but if you want to raise $5 million on your second deal and $10 million on your third deal, you have to execute. So you have to communicate regularly. I have investors that are repeat investors with me because we did something very simple. We sent them a week or a monthly email. That's super simple. We sent them a monthly email. That's it. But they now are a committed investor because the other people they invested with didn't do that. And they felt neglected. Communicate consistently with them. Be honest and open. We send an email. We tell people the good, the bad, and the ugly. We want them to know what's going on. The last thing I want is an investor to be surprised. A surprised investor is a not very happy investor, and a not very happy investor, look out, right? You've got their money. They worked hard for it. They didn't just give it to you because they felt like you're a good guy. That's maybe part of it. But make sure you are the good guy or gal. Under promise, over deliver. We want to always try to look at what could go wrong, right? We want to hold back some of our, we think this is the greatest deal ever. I want to show these investors they're going to make 25% on their money. This is amazing. Everybody's going to want to invest in my deal. Well, guess what? If you show them 25% and you end up returning 15%, they're mad at you. But if you showed them 14% and you return 15%, they're like, yes, this is awesome, man. You said 14 and we got 15. Where's the next deal? Right? So don't tell them you're going to get 25% when you give them 15 or 10. And they should be happy with that. But you made it so amazing to them that now they're upset. Invest your own money. I think that's really important. I think you've got to be in the deal. I think you have to have skin in the game. And the last thing, I already said this, create that minimum investment. All right, I don't have time. This is just a slide that I wanted to put up there. You know, you've got investors. Why should they invest? Oh, really quick. Demanding job, you know, they got a demanding, high-paying job, right? Why would you do real estate on your own? Why would you invest in these real estate deals when you got to deal with all the junk if you've got a high-paying job, especially if you really like it? It probably doesn't make sense. Take that money, invest it passively in a deal. Most people invest in real estate because they want a passive investment. They think, oh, I'm going to buy real estate and I'm going to have this beautiful passive investment. I'm going to sit on the beach and drink Mai Tais all day. Well, guess what? If you're actually actively investing in real estate, you're not going to be able to do that. You're working your butt off to making sure that property is running effectively and efficiently. So let them invest passively in you. They get the tax benefits. They get all the depreciation write-offs, all the same tax benefits that you do. Passive income. Diversify away from stocks and startups. And last thing, I get a lot of investors, I already said this, that want to learn how to do this business. They want to invest with me to see what I do right, what I do wrong, and how they can do it better, how they can copy and mimic what I do. And so they learn while making money. All right, common mistakes, advertising. Don't advertise. We've got a syndication panel coming up. We'll talk a little bit about that so we can dive deeper into that. Always be building your list. You can't assume the deal is going to find the money. Assuming all your investors are invested. My very first deal, I assumed I could raise all the money off of just a couple investors who had told me they're going to invest in my deal, and I looked at it and said, okay, they're all going to invest. And lo and behold, one of them didn't invest. The other ones that I thought was going to invest $300,000 invested $50,000. And so the panic button was hit. I did get the deal raised, but man, was it stressful because I assumed 100% were going to invest in my deal. Okay. All right. I'm supposed to be done, so I'm going to be done because I think it's lunch time. Yes, it's lunchtime. So if you want to contact me, you can contact me. You can go back to the booth, pick up information, my card. But most importantly, instead of contacting me here, which I want you to do still, but meet me. Shake my hand if you haven't already. I want to meet you as well.